This video is especially made for who wants to know about price action strategies and how can we analyze and predict the future price of any market by just knowing about candlestick. Candlestick patterns hugely help in defining the trend of all markets. As I mentioned in my previous videos, there is three types of trends: uptrend, downtrend, and sideways trend or consolidation area. In this video, you will learn how to apply candlestick patterns in your personal strategy and anticipate any storm in markets that can cause massive loss. Several types of candles, and one of the most essential candles are shooting stars. And shooting stars are kind of alarm about change in the trend. For example, when you see a market that has an uptrend and you suddenly saw a shooting star, and it doesn't matter the shooting star is red or green. In both types, it is so strong, and it is like an alarm. It is like a warning that you should be aware that the trend of market can change. And also, for example, in this example, before the shooting star, the market was uptrend, and after seeing the shooting star, the market changed its trend and altered it to the downtrend. Or, for example, in this example, we can see that the market has uptrend, and also suddenly it sees the red shooting star, and then it has changed its trend to the downtrend. One of other candlesticks are long body candles or high momentum candles. These are candles with a long body and also small shadows. Upper shadows and lower shadows are so smaller than the body of the candle, and also these are a strong signal that the market going to keep its trend. For example, in uptrend, when you see long body candles, it means that it's going to be uptrend. Or in the falling trend, when you see several red candles, it means that the market gonna keep its trend to downtrend. And the other type of candles are bullish reversal candles, and it means that the downtrend are gonna change to the uptrend, and there is some condition about bullish reversal candles. And for example, the lower point of the green candle should be lower than the lower point of red candle. Also, the closing point of the green candle should be higher than the closing point of red candle. By knowing these two conditions, you can use this type of candles, and it is a good hint that the downtrend is going to change to the uptrend. And this is one other type of bullish reversal candles. And also, there's two factors for using candlestick patterns, and we should know them perfectly. The number one is defining the trend of market, and we should know that the market is falling or rising, or it is uptrend or downtrend, or for example, it is consolidated area or whatever. And also, we should search for pattern, and also we should practice to learn this pattern a lot. And this is like, for example, learning mathematics, and we should rehearse and practice a lot, that our eyes get accustomed to these patterns and define them by just scanning the chart. And also we should get approval, and getting approvals or several types. For example, there is a volume approval that is so important, and I'm going to talk about it in later sessions. And also there are four types of trends in market. It can be the rally based drop. It means that, for example, the market is at first uptrend, and then there is a range or side or a consolidated area, and then it's gonna fall and the market is downtrend. And uh, for example, at first the market is uptrend, and then there is some consolidated area, and then the market fall. It is a downturn. Or number two is about drop based rally. It means that the market is at first downtrend. For example, it is like a market downtrend, and then the market sees the consolidated or range area, and then the market gonna change its trend to uptrend. And also rally based rally, and also another one is drop based drop. And this is a real-time instance from gold market, and I brought you some example about, and this is about drop based rally. And as you can see, this is downtrend, this is a consolidated area, and also this is a uptrend. Or it is about, at first it is uptrend and a consolidated area, and then it changes to the downtrend. Thanks for watching. One of other candlestick pattern that is so vital to learn is evening star. Evening stars mostly happen at the end of uptrend, and after that the market gonna fall or change its trend to downtrend, and the price gonna decrease. And also there is some condition for evening star that make this pattern so much stronger. For example, the first one is the gap between candles and this shooting star. The more gap between these two candles and the shooting star, the more stronger pattern this would be. And also the lowest point of this red candle should be lower than midpoint of green candle. And also there is another condition, and it is volume condition, and it tells us that the volume of trading in this red candlestick should be higher than these two candles. And also I brought you a real-time example from gold market, and with me I use the pen, and we can see that the laser was better. We can see that the market was uptrend, and the price increased about it was about $2,600, and it goes up to nearly $2,800, and suddenly the market sees these evening star, and we can see that this is the green candlestick, this is the shooting star, it is not shooting star, but we can consider it as a shooting star. And also the red candlestick, if it is the midpoint of green candlestick, you can see that the closing price of the red candlestick is too much lower than the midpoint of green candlestick, and it proves that this pattern is so strong. And also we should check the volume condition, and we can see that this is the volume of red candlestick, and the volume are approximately similar, and it is okay. And overall it is a strong pattern, a strong evening star pattern, and we can see that it changes the trend from uptrend to downtrend. Also the price altered and changed from $2,800 to approximately less than $2,600, and it shows that how these evening star pattern is strong. And another candlestick pattern is hanging man. And hanging man, it's like reverse shooting star, and also they have same function. And also there are two conditions for approving the hanging man pattern. The number one is there shouldn't be any upper shadow, or at least the upper shadow should be so small. And also body can be red or green. It is not so important, but the red ones are so stronger. And also the lower shadow should be more than 2 times of body of hanging man candlestick. These three conditions are so important, and when we see this pattern in the chart, we should check these three conditions to get approved. And also I brought you another real-time example from gold market, and we can see that the market was uptrend, and the price was about 100 $1,980, and it goes up, up. And another candlestick pattern that is so important, and it is worth it to know and understand, is bearish engulfing. And it mostly happens at the end of uptrend. And bearish engulfing means the red candlestick engulfs the green one completely. I mean, the body and shadows completely engulfed by red candlestick. And also there is two conditions that make this pattern stronger and more powerful. The first one is the volume of red candle should be more than the green one, and also the second candle or the red candlestick should engulf the green candlestick thoroughly and completely with its upper and lower shadows. And also I brought you a real-time example from Bitcoin market. And as you can see, at first there was a uptrend and the price was decreasing from $60,000 to approximately $74,000, and suddenly the market sees bearish engulfing candlestick patterns, and also it changes the trend from uptrend to downtrend, and the price decreased from $74,000 to approximately $60,000. And this substantiates that this candlestick pattern is so strong. And also we can see that, let me use the pen, this is the volume of, excuse me, this mess. This is the volume of red candlestick, and as we can see, the volume of red candlestick is higher than the volume of green candlestick. And also the red candlestick engulfed the green candlestick completely, and our two conditions are considered correctly. And after this pattern, the market impacted by this pattern, and also the price decreased after this candlestick pattern. Another candlestick pattern which is so important is three inside down, and this candlestick pattern mostly happens at the end of uptrend. And when the market sees this pattern, the price gonna decrease sharply after it. And for example, in this instance, at first there was an uptrend and the price increased from $37,000 to approximately more than $45,000. And after seeing the three inside down pattern, candlestick pattern, the market changes its trend to downtrend, and the price decreased from $45,000 to approximately $37,000. And also there is another candlestick pattern which is three black crows, and it mostly happens at the end of uptrend. And the market is so sensitive to this candlestick pattern and after these three candles, the market gonna fall sharply. For example, in this instance, at first there was an uptrend and the price increased from $31,000 to approximately $41,000, and after seeing three black crows, the market changes its trend and the price decreased from $41,000 to uh, lower than $31,000. Thanks for watching. You can ask any questions related to trading and candlestick patterns and price action in the comment box, and you can directly message me and I will answer your question as soon as possible. Have a great day. Bye bye.